Chip stocks are surging again. Intel, AMD, Micron, even Apple, all moving on a wave of new AI-driven deals. But here's the real question. Are these just short-term headlines, or are we watching the early stages of a global AI infrastructure race that most investors still don't see? Let's slow down for a moment and unpack what's really happening. Over the past few days, chip makers have rallied on a series of new AI-focused partnerships and supply agreements. Intel gained momentum after renewed political support for its manufacturing strategy. AMD saw stronger demand for its AI accelerators. Micron jumped on higher than expected memory orders, and Apple quietly expanded its chip development pipeline. On the surface, it looks like normal market activity, but underneath, these moves point to something much bigger. AI models are getting larger, data centers are expanding faster than ever, and global demand for compute power is rising at a pace the industry has never seen. Every major tech company, Microsoft, Meta, Amazon, is racing to secure the chips they need for the next generation of AI. And here's the hidden insight. These deals aren't about today. They're about avoiding the next chip shortage, one that could be far more severe than what we saw in 2020. Let's break down the key players. Intel is receiving political backing to rebuild domestic chip manufacturing. It's positioning itself as a strategic asset, not just another company. If it succeeds, it could reshape the global supply chain. AMD continues to gain traction as the main alternative to NVIDIA. Its MI300 accelerators are seeing strong demand from cloud providers. Investors are watching to see whether AMD can capture meaningful AI market share. Micron is benefiting from surging demand for high bandwidth memory, the kind needed for training large AI models. As AI grows, memory becomes just as important as compute. Apple is quietly building its own AI chip ecosystem. That reduces reliance on external suppliers and gives Apple more control over its long-term AI strategy. But the real story isn't about individual companies. It's about what they're all preparing for. We're entering a new phase of the AI boom, one where growth is no longer limited by software, but by hardware. AI models require exponential compute. Data centers are running out of space, cooling, and power, and chip makers are struggling to keep up. Governments are stepping in with subsidies, companies are signing multi-year supply agreements, and new chip factories are being built around the world. This is the part most people miss. The AI revolution isn't happening in apps or chatbots. It's happening in factories, supply chains, and power grids. Here are the signals that matter, the ones most investors overlook. 1. Long-term supply agreements. Locking in chip supply for 3 to 5 years shows confidence in long-term AI demand. 2. Rising capital expenditure. Cloud providers increasing data center spending is a leading indicator of future AI growth. 3. Government incentives. Subsidies and tax credits reduce risk for chip makers and support long-term expansion. 4. Power grid upgrades. AI is pushing energy infrastructure to its limits. Companies investing in power solutions are preparing for massive future demand. 5. Memory demand. High bandwidth memory is becoming the bottleneck for AI training. Micron and Samsung stand to benefit. 6. Foundry expansion. Intel, TSMC, and Samsung building new fabs signals a shift in global chip dominance. These signals tell us one thing. The world is building the hardware foundation for the next decade of AI. But no trend comes without risks. Risk 1. Supplier concentration. A handful of companies control the entire AI chip supply chain. Risk 2. Geopolitical tension. Taiwan, China, and the US remain deeply interconnected in chip production. Risk 3. Power shortages. AI demand may outpace energy supply. Risk 4. Valuation pressure. Chip stocks are priced for perfection. Any slowdown in AI spending could trigger corrections. The biggest risk isn't demand, it's execution. Chip stocks are surging because the world is quietly building the infrastructure for the next era of AI. These deals aren't short-term news, they're long-term signals. The companies preparing now will shape the next decade of technology, and the investors who understand these signals early will be the ones best positioned for what comes next. This is AI Tech Market Watch, breaking down the trends, shaping the future of technology and the markets.